Infinity Trust Mortgage Bank plc, in spite of severe global economic challenges, has proposed a final dividend of 4 kobo for every ordinary share held, an increase from 3.5 kobo paid in 2019. This the bank has done in a year that most businesses either shut down or are having a slow recovery due to the impacts of COVID-19. Chairman of the board, Dr. Adeyinka Bibilari, speaking at the bank's annual general meeting in Abuja, disclosed that the bank has remained consistently profitable for 15 consecutive years and maintains a strong desire to reposition for greater relevance, impact, and service delivery in the years ahead.
When a mortgage bank exists, the essence is not really to pay shareholders dividends and 4 kobo, 3 kobo every year. Like I said 2-3 years back, the key reason the bank exists is to shelter people, is to provide homes to those who find it difficult to get homes. The modern mortgage system is to enable you to own the home and pay after.
Chairman of the board expressing optimism that the mortgage banking industry will weather the COVID-19 storm in 2021 to an extent, stated that the bank continues to work towards expanding business by seeking new opportunities, relationships, and strategies, while consolidating on its efforts to ensure that key performance indicators and efficiency ratios stay within tolerable limits. Also, Managing Director and Chief Executive Officer of the bank revealed that despite the slowdown witnessed by the mortgage banking industry in Nigeria due to the COVID-19 pandemic and subsequent growing costs of doing business, ITMB improved operational efficiency by reducing its cost to income from 62% in 2019 to 56% in 2020. With a turnover of over 1.3 billion naira, profit after tax stood at 416.7 million naira, which represents a 7% growth over 2019 PAT of 400.1 million naira.
I hereby move that a gross dividend of 166,817,828 naira 80 kobo only in respect of the financial year ended 31st December 2020 be paid to all shareholders registered in the books of the bank as at the closure of register on the 23rd of April 2021.
Nobody envisaged COVID-19 while preparing budget for year 2020. But when the situation comes, we have to realign our business to get in tune with the new dictate, the new paradigm that's changed. So what we did is just to look at our customer and look at how to meet their needs. Instead of looking at ourselves, we know that COVID affects everybody, affects every household. So what can we do to make the pain of COVID lesser on the customers? We make sure that our mortgage system becomes flexible, and we adjust our interest rates for those people that are greatly affected by COVID-19 pandemic.
Being one of Nigeria's leading mortgage banks, ITMB has significantly increased its shareholders' fund from less than 50 million naira in 2003 to over 6 billion naira currently, and maintained an unbroken record in terms of consistency in dividend payments to shareholders for 14 years running. Expressing happiness and satisfaction over dividends that the company has gotten for them, even in the face of global challenges, shareholders pledge complete support for the board's decision for expansion and any step that will improve their profits margin.
We are very happy as a representative because this company have been very good, have been doing very well. You can see some of the companies are not able to pay dividend at all, but this one is able to pay, let's say, pay 3.5 today now they are paying 4. So that means that there's improvement upon the condition they find themselves in. So we feel happy and everybody is happy. We are going to deliver the message to them all that we are happy. And all those intending investors, we will advise them to put in their money here because there's a lot of opportunity here.
The 2020 annual report, among other things, reflected financial highlights and performance, statutory reports, national disclosure, corporate information, and also shareholders' information. Domestic economic activity slowed in the first half of 2020 following the effect of COVID-19 pandemic. Both oil and non-oil sectors performed relatively poorly, but overall, output contracted by 4.97%, reversing the growth trajectory since 2017 when the economy exited recession.